of development and testing. Now, unfortunately, that stage went on longer than we anticipated because of the onset of COVID. So 2020, when we should have been finishing development and moving into the live pilots, we were COVID came about. So we had to readjust, we had to reimagine what we were doing. And it allowed us actually to improve the products because certain features that we now have with Dcash actually came about as a result of COVID. So, for example, our e commerce feature, which allows consumers to use Dcash online, came about as a result of COVID because we recognize persons now needed not just to send payments from one person to another across country within the ECCU, but they also needed to be able to pay bills online, to make payments online. So that e-commerce feature actually came about as a result of COVID. The journey so far has been very exciting, very interesting. We have learned so much, and I think as we go about doing our consultation, doing our public education, interacting with the financial institutions and the various stakeholders, the merchants, etc., it gives us an opportunity not just to sell Dcash, but to explain to the person, help the person to understand the importance of being part of this whole digital transformation, recognizing that if we're to function in the world, if you're to operate on the world stage, we have to be at the same level. And so it has given us the opportunity to do public education and for persons to understand the importance. One of our main objectives behind Dcash is financial inclusion, and that is to make sure every citizen of the ECCU has an opportunity to participate in digital transactions. And so that too is one of the thrusts that we have, which is why we have our product designed in such a way that even if you don't have a bank account, you can still access Dcash. Whereas currently, most of the financial services that are available require you to have a bank account or access to a bank account. We have designed Dcash in such a way that you don't need a bank account. You can actually access Dcash and participate in these digital transactions without having a bank account. So we continue the
I don't want to
journey.
put you on the spot, Charmaine. I don't
Yeah.
want to put you on the spot, but how is that possible? Like, how can I not have a bank account but still access Dcash?
Okay, so we have what you call a value-based wallet, and these are administered by agents, which are non-bank licensed institutions. So with a
Okay.
value-based wallet, you have a lower threshold, a lower spending limit because of the added risk. However, it gives the opportunity. So you have less KYC information. So you provide your name, your email address, and you provide a government issued ID and a selfie against which we do the verification there, and you're allowed to have that value based wallet. But as I said, the threshold, the spending limits are significantly lower, but it's sufficient to allow you to make minimum payments using Dcash. So you can pay your utilities, you can buy stuff at the supermarket, having a value-based wallet. So even though you're not in the banking system per se, you can still send funds to your daughter in Grenada if you're in St. Lucia. You can send funds to your cousin in St. Kitts using Dcash.
And these agents are places like Mr. John Shop or Miss Molly's hairdressing salon. What kind of agents are these?
So we use non-bank licensed institutions. So we have, for example, in Antigua, for example, we have a credit union. So they offer that service because it's important as well to keep the credibility, to make sure persons feel that Dcash is credible, that these agencies are licensed, that they are subject to some level of regulation. So for in an international sphere, when persons look at Dcash, they are comfortable that we are taking the necessary safeguards and necessary steps towards making sure it is authentic. So we have these. So we have some fintech companies as well operating as agencies as well in the islands.
Thank you. Very interesting. John, I'm going to tap to you and then I'll go to Wendy. But let's go back to, and that whole point about not having a bank account, and that falls in line with the whole unbanked and underbanked. And you said that 400,000 persons out of 600,000 are underbanked. Am I correct?
So
In
it's
Trinidad
a
and Tobago?
mixture. We have about 240,000 unbanked and about 140,000 underbanked. And there's a
Okay.
difference, right? So unbanked
Yeah.
persons who have zero relationship with a financial institution, and underbanked those customers who have limited relationships, right? And it's a sort of
Yeah.
interesting dynamic because, just going back to that on financial inclusion, right, where one of the things that we are trying to do is really, we're trying to undertake a national survey to really get a pulse in terms of why persons have, in my sort of estimation, I have sort of coined my own term, being voluntarily financially excluded, meaning that I do not want to be part of a bank. I do not want to use any form of digital payments. I prefer to use cash. Yeah. And try to understand, is it trust? Is it friction? Is it fees? Is it a combination? Because those are the factors we need to understand, right? Because one of the, just to lead off from what Charmaine was saying, the whole importance of financial inclusion is not only for you to be able to use the digital payments, but if you think about it, for anybody in society, being part of the formal economy and having access to credit, that's the main focus of financial inclusion, where persons can build a profile, they can then borrow, whether it's to send the kids to school, whether it's to buy a vehicle, whether it's to purchase a home. But without access to credit, you can never really move persons within that sort of welfare net, into society, So it's a very, very important mechanism when we kind of look at it. So that is when I kind of give that distinction, when you look at the underbanked, and we kind of see those persons as, they will probably look to go and do business in terms of like with a credit union or even like a fintech, electronic money issue and so forth. So that's even from when you look at the whole fintech sector, there's always probably going to be a challenge where you have people not trusting of the traditional financial institutions for one reason or another. And that creates, I think, a good opportunity for the fintech companies to come in and really serve what I'm calling that unbanked and underbanked sort of population across the region.
Wendy, on that point of not trusting, you've been a banker and now you had a Caribbean Association of Banks. Why do we have so many people in the region still not trusting, whether it's the banking system or any other thing other than cash? What's the underlying issue there?
I think if we look at it from on the surface, it's comfort, right? We stay true to what we are most comfortable with. So there are a number of factors that will impact our ability to adapt or adopt anything new, really and truly. So we have a few things that we need to look at. So within our Caribbean context, religion is a big factor, and it plays a huge factor in how people make determinations for how they adopt, for example, technology. And more importantly, we speak a lot about chip-based banking now. So we hear, even in our solution context, we hear
What's
people
that,
saying,
Wendy?
your bank cards that have, the bank cards now, you see it has that little chip, literally a chip technology. Okay. So when you go to some merchants, you no longer have to put in a number. You can simply tap your card to the device and it picks up the transaction and you get your approval. So that's just making banking a lot easier, making the processes a lot smoother, and of course, removing the need for contact between merchant and purchaser. So we see that as being an issue. We also, of course, have to take into consideration the ages of our populations. Those who are older, of course, it will be a lot more difficult for them to adapt and learn the new technologies. Like you, my 79-year-old mom is very adept because she's very open to new experiences. I think our younger population, of course, we will see a greater level of adoption. The other thing that causes a level of mistrust, of course, the banking sector is perhaps one of the most heavily regulated sectors that we operate within in the region. So that, of course, creates a level of friction. Persons don't necessarily understand why there are such stringent requirements when they come in to do business in the banking sector. We have seen some relaxation, but a lot of it is the regulatory or even the legislative requirements within various jurisdictions. One of the things that we have to be cognizant of within the region is we have various influences. So for example, again, if we were to look at St. Lucia, we have that heavy English influence. If we will look at Dominica, we have whole different requirements for different processes and procedures within the banking sector. Some will make it a little bit more laborious in terms of getting through with your transactions, and others you walk in, you walk out, and the processes are a lot easier. Even those differentiations between islands, again bearing in mind free movement of trade and free movement of people, makes it a little bit more complicated, because persons will say to you, I came from St. Vincent, I got this done in a day. I come to St. Lucia, it's taking me 2 weeks, nothing is happening. But we do have to look at the regulatory and the legislative requirements of each individual island and the impact that these have on the relationships that the banks have with their customers. So there are a number of impeding factors that cause a level of mistrust, but we must bear in mind as well that part of the primary responsibility of the banking sector is to instill a level of trust in ensuring that your monies are held safe. And so part of the reason why central banks, for example, and the banking sector will be sluggish sometimes in their movement is, to Shaman's point, the amount of work that has to go in on the back end to ensure that there is safety when products and procedures are put out is significant within the banking sector, and perhaps more so than some of the non-bank financial institutions who are regulated very, very differently.
Thank you so much, Wendy. When we were doing our pre-show talks, Charmaine, I asked you with Dcash and with Persons, the digital transformation of finance, I asked if you were getting a lot of questions by persons about, is this all replacing cash? And, persons being really shocked and surprised and worried. What has been your experience with that?
So initially, we did get those questions. Persons had the fear that we are replacing cash. We have made it very clear we are not replacing cash. Dcash works alongside cash, because we do recognize that even for you and I, Tony, there are some transactions that persons are more comfortable doing in cash. That's the reality. And so there will always be a place for cash transactions throughout the society. So we can never eliminate cash. What we're doing is to make it easier and to provide another option, an easier option, an option that makes it easier for you to make payments. It doesn't require you to stand in long lines, to go in the banking halls, or even go into the ATMs. So we're saying, yes, there is the need for cash. There will always be a need for cash. But we're providing this more flexible, more efficient option to make cash-like payments in a different way. So we're not replacing cash, and we've made that very clear.
So cash is still queen.
Yes, it is.
John, cash is still queen, eh?
I'm outnumbered. I can't say nothing.
I was actually going to then jump to you, John. I know we made this joke in our pre-show talks. But do you think there's a day that cash will no longer be queen?
I hope so. Based on the industry I'm in, that's where we're trying to be. When you think about it and all the sort of innovations that's taking place, right? Earlier on the panel, they were talking about the new features with the cards where it's now tap and pay, right? And I think that has done wonders for the older population, because it's so simple for them now. Because, even myself, I used to, when you go to get a cup of coffee and somebody's in front of you is elderly, and this is not slamming the elderly population. I will reach there one day. You put on the glasses. You have to look on the small keypad. What's my PIN? That could take 2-3 minutes. That's everybody in the supermarket, right? But now you're realizing you can tap and pay, right? And the interesting thing when you think about that, and these sort of what I call gamify features, I think it's adding to the experience, because it's all about getting in and getting out sort of quickly. Because, when you do think about it, the sort of whole rationale for building in that technology, you would remember not so long ago, we used to have problems where you go to a restaurant, you give somebody your card, and the person goes to the back to do the transaction and brings you the bill. And next thing before you reach home, you're ordering 3 jet skis from Peru, right? So the whole idea is that the card never leaves you. So you're always in control, you know? So I do think a big part of it is the customer experience. And again, this is why I see the marriage between fintechs and banks and the payment networks, because if you look at what's happening across the region, you know, you have the fintechs largely focusing on the customer experience. You know, Charmaine is talking about St. Lucia, I know there's a fintech entity called Penny Pinch, you know, and they have a mobile wallet. But what I realize that's sort of sticky for them is that you build rewards, you know, and these are the sort of behaviors that I think the fintechs are absolutely understanding, you know, the cultural norms in terms of what are driving people, because at the end of the day, you know, we're going to have I would say a flurry of different options. And I think the whole strategy should not really, I don't think cash is going to disappear, but we need to make cash so unattractive so that it isn't a beauty queen, you know? Cash could be a garbage queen, but definitely not a beauty queen. So I think that's where we need to be.
On that note, John, on a panel as the only man with 3 other women, I will ask all of our viewers to stay tuned. Don't go anywhere. We'll be right back.
CEF is for me and you. Beyond COVID, CEF is for me and you. Caribbean Economic Forum. Beyond COVID, CEF is for me and you. Caribbean Economic Forum. Log on, tune in, and join the conversations and engage with the experts. Help to find common solutions for common problems during this COVID situation. We fight it to protect our livelihood across the nation. This is for we to learn, share ideas and concerns, to live life like we deserve. We must change we mindset first. Build strong economies, closer societies. We all have a duty. CEF is for me and you. Beyond COVID, CEF is for me and you. Caribbean Economic Forum.
Sisson's WeatherGuard Pro. For every project, there's only one Pro.
Mingle and Jingle coming soon to all GBN platforms.
When you need your prescription filled or you require non-prescribed medication, supplements, or all your personal needs, visit Gittins Healthcare at locations on Wall Street, Grandans, Victoria Street, Granville, and Central Deputy Street, Wall. Gittins Healthcare aims to provide an exceptional personalized pharmacy experience. Additionally, children under 5 and adults 55 years and over will enjoy 10% discount on purchases of $20 and over on prescription medication. Stop settling for less. Visit Gittins Healthcare, where your health is our priority.
When a loved one passes on, we all need the comfort, support, and guidance of a trusted friend. You can rely on LaCour Brothers Funeral Home. We provide a personalized professional service that exceeds all expectations. Our dedicated staff responds to your every need with the greatest detail, ensuring affordability with a variety of options. Our upgraded state-of-the-art facilities, spacious air-conditioned chapel with live internet streaming, a modern, environmentally safe crematorium, the only of its kind on island, private viewing spaces, large on-site repast center, a modern transportation fleet. Join our burial society today and make personalized arrangements for that final moment. As you prepare to enter your loved one into eternal rest, visit or call LaCour Brothers Funeral Home and select a package that brings added comfort to the entire family. LaCour Brothers Funeral Home and Burial Society, continuing a tradition of excellence.
miss the new season of Interesting Grenadians on GBN TV and social media platforms from Wednesday, October 12th at 8 p.m. and every Wednesday until November 9th, featuring the Anya Chow Chung story, the Richard Duncan story, and lots more. It's Interesting Grenadians, celebrating our interesting and outstanding Grenadians at home and abroad. Wednesdays at 8 p.m. on GBN, beginning October 12th. You won't want to miss it.
The last minute of the show, it was one which will probably go down in one of the most enlightening comments for this series that I've been moderating. Thank you so much, John, for that good laugh. We're going to go to social media, and we have our social media moderator, Dr. Ankie Scott Joseph. Good night, Ankie. The floor is yours.
Good evening, Tony, and good evening, panel. Social media is just warming up. However, we have a few questions for Wendy and Charmaine. Wendy, banks have traditionally been the intermediary between the consumer and their bank accounts. With the removal of the intermediary, as Charmaine mentioned, Dcash basically does not require you to have a bank account. How is this going to impact on consumers' costs that they will have on their usual bank account? Would the financial institution now be transferring extra costs because of the loss of business? And for Charmaine, online payments are vulnerable to technical disturbances, as you would have seen in January of this year, where the ECCB Dcash went offline. How have these challenges been mitigated? And lastly, are there any measures in place to address capital controls? Are there any limits on the amount of cash that a consumer can transfer? Thank you very much, Tony, and I'll listen to the responses.
Thank you. Panelists?
Thank you, Ankie. And let me go, since that first question was directed to me. In terms of whether or not the bank will then look to distribute costs differently so that consumers will be impacted based on what you perceive to be possibly a lack of or reduction in consumer traffic, it is unlikely that we would see such a significant movement of customers away from the banking sector, at least immediately. I think that the banks are always in a position where strategically we are aiming to determine how do we continue to keep up with the dynamic changes that we see happening within market. If you would recall when Charmaine spoke earlier, one of the things that she factored in was the fact that not all transactions can be done utilizing Dcash, and Dcash is meant to be an alternate use of your funds, so to speak, or access to your funds. So I don't think that we are in a position where we would say that the banks are likely to begin to hike their charges to offset transactions that would no longer be done through them. There will be transactions that inherently would have to be done through the banking system. I think what we're seeing now is that the banks are also seeking opportunities perhaps to embrace fintechs and to begin to work alongside fintechs, recognizing that there is a change in the market. And as everything else, the banks have responded favorably. It may be, like I said in the past, it may be sluggish in response, but we also have to ensure that when we adopt technologies, it actually does fit the market. For example, for those of you who would have moved to more utilization of online platforms for meetings during COVID, certainly in St. Lucia at the Secretariat, we note that anytime it rains, we have a very glitchy customer interaction. So we have to ensure that the technology, the rails, which I think John mentioned earlier, are clean and crisp before we go into production in the banking sector. Again, because we have to ensure that the element of trust remains alive and well between the consumer and ourselves. I hope that answers the question, and thank you for your question this evening.
So to go to the question, yes, thank you, Ankie, for the question. So speaking about the interruption that we had in January, one of the things it provided an opportunity for us is to re-examine the platform we have and the controls, the security features that we have. Fortunately for us, we have Dcash in a pilot, and what the pilot is intended to do is to learn and improve. And so what that gave us the opportunity to do is to see where the gaps are. What do we need to improve? What do we need to change? And so since then, since we've come back online, or even before we came back online, we already started to look at what are the changes we need to make. What are the additional safeguards we need to put in place? What additional resilience we need for the Dcash network? Recognizing that when we move from a pilot to commercial deployment, we have to ensure that persons have access to their funds. Because essentially, Dcash represents persons' disposable income, money that they have to spend. And so what that allowed us to do, unfortunately, in a pilot setting, is to improve. And so as we continue to go through the pilots for the next few months, we also be focusing on what further improvements are required. How can we make the network more resilient to prevent any such occurrence in the future, and to be able to, in the event that there's any glitch, that we have sufficient backups, sufficient redundancies in place, that the consumer at the end is not adversely impacted. So I hope I answered the question in terms of the resilience. In terms of the capital flight, we do have safeguards in place in that wallet limits are in place both for the consumers and for the merchants. So at the value-based level, as I mentioned before, we have very low limits. We have lower two tiers, 1,000 EC per month and 2,700 EC per month for the value-based wallet users. That ensures that the risk is mitigated there. For those persons who onboard via their financial institutions, their banks or credit unions, they're also wallet limits. So we have 3 tiers for those for consumers, and those are based on the risk profile. So when financial institutions are onboarding their customers based on the risk profile, they will assign a Dcash limit to them. Similarly, for merchants, when they're onboarding their merchants based on their risk profile, they have a limit as well. So that prevents that capital flight. Persons can only transact a certain amount in Dcash based on those limits. In addition to that, Dcash is non-interest bearing, so there is no incentive for persons to move large amount of funds out of their bank accounts into the Dcash wallet, because there's no interest. Dcash is essentially a transaction payment instrument. So it's for transactional purposes. It's for your monthly payments, your regular payments, not necessarily for large payments. So to Wendy's point, there are transactions that will still require the banking system. So we have those guidelines in place to prevent that capital flight and an inadvertent run on our commercial banks or credit unions. Thank you.
Thank you. Thank you. I am going to turn us to Hallam Hope, and Hallam is a blockchain consultant. He has a question that he wants to pose to the panelists. Hi, Hallam. How are you?
Hi, good evening, and thank you. Senior banking sources in Switzerland tell me, thanks to government policy, regulation, and legislation, private banks are offering cryptocurrency services to the Swiss and overseas clients. Twitter, with its 237 million customers and growing, is being encouraged to get involved in global digital payments. In the Caribbean, citizens are trading and investing in cryptocurrency. St. Vincent and the Grenadines is studying how to get its creative industry engaged in the metaverse. And I hear from several sources the Prime Minister of St. Vincent and the Grenadines and his son are on board with trading. Barbados has become the first country globally to have a metaverse presence and wants to tap into non-fungible tokens for the creative industry. So my question to the panel is, can traditional Caribbean banks pivot to meet the needs for cryptocurrencies and opportunities for blockchain technology, or given oft-stated concerns, will companies, governments, or Caribbean citizens have to look elsewhere?
Okay, perhaps I can take a stab at that. And let me just put out my disclaimer that I am by no means whatsoever a blockchain expert. But from my little knowledge, let's take a look at blockchain and let's see if we can examine and understand exactly what we are referring to when we speak of blockchain. So blockchain really is a digital ledger, meaning that the information is contained in a chain, literally in a block created by nodes. So for example, the chain that you're wearing around your neck has several links interconnected that eventually form that chain. And so if we look at the analogy of a chain in its truest form, one of the things that we have to look at, of course, would be the strengths and weaknesses of your chain, your blockchain. So if we were to look at the benefits of a blockchain and the implementation of such, then we look at the reduced costs that would be associated in being able to process these transactions at very high speeds. We would also look at the transparency and visibility created by the blockchain, and of course, the individual creation of data or ownership of data. If we were to take a look at each one of these, for example, and of course there are many more, this is not all inclusive, but if we were to take a look at, for example, the cons associated with the pros that we've just discussed, let's take a look, for example, at scalability of blockchain. So one of the concerns that would be raised there is based on the number of persons who begin to feed into the blockchain, that is where information becomes stored into the blockchain. At a certain point, it's sort of, we begin to experience diminished scale of returns because there is a need for more and more capacity of the block in order for us to be as efficient as we would have liked to be. The other thing that we would have to look at, of course, is the speed of processing. Part of the concerns as it pertains to blockchain is there is a very rigorous process of verification of transactions. At each node, there has to be verification of the transaction, which leads to, in some instances, duplication of the verification process, thereby negating the benefit, which is the speed of processing. Also, if we look at the visibility and transparency, and if we think about the chain, if someone is able to break the chain through the node, that is your weakest link within the chain, it means then that this individual has access to the entire block or the entire chain of information. And so the security then comes into question and sort of not necessarily nullifies in entirety, but certainly poses a challenge to what is otherwise seen as the benefit of visibility and transparency. And then if we look at the individual control of data, similarly, proof of stake. So if, for instance, the blockchain is owned by the central bank. Let's use that as an example. And again, this is just an example. And someone is able, for example, to purchase the majority of the shares or the stock held within the blockchain, the information, a 51 stake. That person then becomes the owner of the blockchain. And so understand, of course, the inherent risks because there is so much data stored within the blockchain. If someone purchases the majority stake, of course, that leads again to the question of security or insecurity of information. And then there are issues around the trust of the information. So having said all of that, are the banks open to exploration? For example, in 2021, late 2021, we would have seen HSBC and Wells Fargo beginning to explore the opportunities of blockchain, again, leaning on the benefits that were outlined earlier. I have no doubt that, the time will come where all of these will be explored within the Caribbean sector, but we have to be very vigilant. Again, as mentioned before, there is significant regulation. So perhaps, Charmaine, at this point, you would also want to lean in on, from a regulatory standpoint, whether or not the central banks would be willing to entertain blockchain into the banking sector. And the other factor that we have to look at as well is legislation allowing the banks to operate within that sphere. So again, the banks cannot independently take the decisions to adopt and adapt technologies. There are several stakeholders who also have to be present in that conversation to ensure that we maintain a level of balance and safety of our economies within the Caribbean.
So if I may add, Tony, so as Wendy indicated, so I think it's safe to say that ECB does entertain blockchain because our Dcash is on a blockchain platform. So we do recognize the significant benefits from using blockchain for solutions. However, in terms of regulation and legislation, we are in fact currently looking at our payment system legislation because we recognize that the digital transformation is happening. We can't deny that. So what we have to do is to ensure that there are the necessary legislation as well in place that would mitigate the risks associated with these particular developments. So to borrow from a comment made by the Prime Minister of Barbados at the FinTech Islands conference yesterday, the regulations must match the risk. So we have to assess, in looking at the regulations or legislation, we have to assess what are the risks associated with these various developments, the cryptocurrencies, the blockchains, etc. And then ensuring that the necessary safeguards are put in place through the legislation, through the regulations to mitigate these risks. And when you are correct, it requires consultation. So the central bank on its own cannot do this. It requires consultation with the industry, the financial services industry, with the member governments as well, because together we have to regulate the space together. So in going through the process of reviewing our payment system legislation and making it, being able to facilitate these fintech companies and these various developments in the financial space, we have to have these conversations. We have to ensure that we all understand what the risks are, what the benefits are, and ensure that we don't make the regulations or legislation so onerous that it deters these development, but it actually facilitates them in a safe way. So that is where the central bank comes in as a facilitator in this regard.
Thank you so much. We are going to move on to another intervener, and she is Keisha Julian, and she is the COO of CariPay. Hi, Keisha. The floor is yours.
Hi, good night, everyone. So, given the important role that cross-border payments play in unlocking regional growth, what role do you see central bank digital currencies playing in facilitating cross-border payments within the region?
I'm going to ask Charmaine to...
Yes, so I think that central bank digital currencies will play a very important role. And the fact that we see more and more central banks actually exploring central bank digital currencies. So, for example, when we started this journey some 4 years ago, about 20% of the world's central banks were exploring central bank digital currencies. We're now at 80% 4 years later, which says to you that central banks are recognizing the importance of central bank digital currencies as the world moves to digital transformation. And so what I think would happen eventually is that similarly how central banks interoperate with each other via the SWIFT network for payment settlement, ultimately, central bank currencies will become critical in that cross-border flow as well. And so what is important to facilitate that, however, is to have the conversation early, making sure that the central banks speak to each other in the design of the central bank digital currencies to ensure that when that time comes, we can easily interoperate. And I think we're starting that because we're seeing more and more working groups across central banks, across regions, at the international level, looking at central bank digital currency designs, what the fundamentals are, because it is recognized that eventually central bank digital currencies will in fact play a critical role in those cross-border payments, cross-border settlements, because then more and more payments will be made using central bank digital currencies and we'll move away from traditional settlement methods. And so it is important, it will play an important role.
Thanks, Charmaine. We have a question from the email, and I'm going to ask Cash may be queen, but John is king. So I will ask John to answer this question via email. And this question is, by what year should we expect digital payments to become mainstream in the Caribbean?
That's an interesting question. And I say interesting because I don't think digital payments is an end state. I absolutely think it's a journey and it's something that'll be continued to be transformed. And if you think about it, right, you have all these islands in the Caribbean. Now, one thing is absolutely clear, there is a lot of options when it comes to what I would call providing these services, digital payments, acquiring, and so forth. You have the banks who are, and we were seeing it before, who are basically sort of accelerated their own plans, launching new types of products and services. You have fintechs now rising up. You have credit unions. You have cash agents. You have a lot of actors that are now stepping up and providing different options. So I think that, to be honest, the demand side and the supply is now sort of kind of catching up, right? And I absolutely do think that if you look across the region, I think we have a fintech in almost every Caribbean country. When you look at Trinidad, we have the WePay. You look at Bahamas, you have Island Pay. You have Bit in Barbados. You have Penny Pinch in St. Lucia. And you have so many others, Canoe Pay. And, the list goes on and on and on and on. And these are mature companies who are now, servicing hundreds of thousands of customers across their own networks. And I want to provide a comment going back to on the cross-border side, because I think that's where, coming back in terms of the game changer, because when you think about fintech and then going back to this whole digital payment, right? Because one of the absolute pains within the region is being able to send money from island to island. You might as well be sending money. If I'm sending money from Trinidad to Barbados, I might as well be sending it to Ukraine, because it follows the exact same pattern, right? It's very, very complex. It's very fragmented. You have multiple parties involved. It's basically passing a hot potato, right? But when you look at fintechs now, and you are looking at the sort of rails that they are leveraging, whether it be the Visas, the MasterCards, or even their own sort of rails, it's providing a lot of transparency and a lot of ease of use that I think it's creating that sort of parallel rails to even further accelerate, because I think that's the biggest pain point we have in the region outside of simple merchant acceptance is how do I send money, how do I do trade within the region, and how can I basically have a online store and accept payments of somebody in Grenada and get the good service to them. So how do we create that common Caribbean marketplace? So I think digital payments, basically, to answer the person's question squarely, it's here. It's really about now your choice. What is your flavor?
I have two more questions for you, but we have a short time before the break. But we'll be right back. And I really want to ask you about who is getting it right when it comes to fintech in the world, and what are the key elements within a fintech ecosystem that you would advise. But we will discuss that, John, right after the break. We'll be right back.
Although we're called a bank, the Central Bank of Barbados is not like other banks. We are a statutory body, and we work alongside government to safeguard the Barbados dollar's exchange rate with the US dollar. We also work with the Financial Services Commission to monitor the entire financial system. So even though you cannot get a loan or open an account with us, we are very important and are truly committed to Barbados's continued economic growth and financial stability.
Mingle and Jingle coming soon to all GBN platforms.
Don't miss the new season of Interesting Grenadians on GBN TV and social media platforms from Wednesday, October 12th at 8 p.m. and every Wednesday until November 9th, featuring the Anya Chow Chong story, the Richard Duncan story, and lots more. It's Interesting Grenadians, celebrating our interesting and outstanding Grenadians at home and abroad. Wednesdays at 8 p.m. on GBN, beginning October 12th. You won't want to miss it.
EC Polymer Notes, our new money.
Here's how you can detect genuine EC Polymer notes. Feel. Polymer notes feel smoother than the material from which paper notes are made. Also, the front of each note has raised bumps at the top left-hand corner. These bumps form shapes that are familiar to you. Look for the clear window at the front and back of each note. This window allows you to see through the notes. If you hold the notes up to the light, you'll see the value of the note in an area of plain colored print. Tilt. A holographic foil is on the $100, $50, and $20. The images move and their colors change when you tilt the notes. Remember, detecting genuine EC Polymer notes is as easy as 1, 2, 3. Feel, look, and tilt.
EC Polymer Notes. Cleaner, safer, stronger.
You mentioned the wing kai, then you have things like Manumos, Force Combat, you know. We have the low folder.
It is kind of like the same man, and it's just different name for the same kind of thing.
And last but not least, I just want to say to all the men who saw me, call me, and ask for a piece of cake. I'm baking this weekend.
Join us Fridays at 8 on GBN Television, K105 FM, GBN's Facebook page, and YouTube channel for We Culture.
Welcome back to this edition of the Central Bank of Barbados's Caribbean Economic Forum. This one is entitled Moving to Digital Payments. What does it mean for me? And before the break, I had two questions for John Outridge, our esteemed panelist. And I wanted to ask you, John, the first question is, where do you think, what country do you think is getting fintech right? Who do you look at as a model for fintech?
The answer may shock you, because it's a relative newcomer when you think about it. When we think about successful fintechs, right, we tend to think about the US. We think about companies like Stripe and PayPal and Square, you know, who are all providing these sort of all-in-one solutions, both for merchants and customers and so forth. But, you know, one of the countries that I've been looking at, and when you look at it, it really sort of parallels the Caribbean, has been India. You know, so when you look at India, 1 billion people, you know, absolute massive landmass, but same problems we face in the Caribbean, right? You have challenges as it relates to very huge unbanked population, access to financial services because of the geography, you know, and those are the sort of key challenges, right? And one of the things that I realized that they have recently sort of done, but it has sort of driven, I would say, you know, to some of the very large successful fintechs, is really where you see the state and the central bank sort of working to provide what India calls now the UPI, right? United Payment Infrastructure, where basically you have a layer that all these payment methods, all these fintechs in India can now connect into. So meaning as a citizen and as a merchant, you have a sort of common layer where you can plug and play. So meaning that there is a layer that's facilitated by the state and the Central Bank of India. You have all these fintechs plugging in. So then as a merchant, as a customer, you know, gone are the days you have. And you see that in the Caribbean, right? When you have to, or even when we're looking at how we want to onboard fintechs, right? It started with the banks, right? Where you go to a merchant or you go to a business place. They may probably have 2 or even 3 point of sale machines, right? They may have one for this bank, one for this bank. They might have a machine for Top Up, a machine for Magna, you know, and that is where you start to see. And then obviously fintechs are now sort of kind of removing the hardware and now apps on your phone and so forth, right? So I think India is one of those territories that I personally have been kind of looking at very, very closely, because they have also done something very, very interesting where the state and the central bank has almost sort of discounted the transaction rates to nearly zero, which makes it very, very, very cost effective. Again, driving more persons to use these variety of fintechs, giving them a common playing field, you know, and sort of disincentivizing cash.
Got you. And my second question, I'm not going to ask you about why you didn't mention the UK with places like Revolut, etc. But I'll move on to the second question because we are strapped for time. What do you think are the key elements for a perfect fintech ecosystem?
I classify it as three things. You need to have three key ingredients, right? Definitely, when we're looking at a region and you're looking at those sort of key elements that any fintech company would absolutely need to get to scale is access to talent, access to the right quality of talent within the jurisdiction, whether it be software developers, business persons, analysts, and so forth. Access to opportunity, right? So making sure you have the right environment, the right ecosystem where a fintech can come in and operate. You have the right level of infrastructure, particularly from the banking side, right? And the acceptance to go along that. And, that will then kind of drive the third element, which is really, access to that network side in terms of fintechs want to come to a jurisdiction where there are other fintechs, believe it or not. You don't want to be the sole fintech operating because this is where you see the collaboration, this is where you see the partnerships, and this is what sort of creates that environment and that ecosystem to do better.
100%. We are going to go to the emails again. We have some questions coming in. Are digital payment systems likely to create issues ranging from foreign currency shortfalls to the easy illegal movement of funds across borders? I'll repeat that. Are digital payment systems likely to create issues ranging from foreign currency shortfalls to the easy illegal movement of funds across borders? Does anyone want to take that question?
I can take a stab at it, Tony. I think that it comes down to how it's regulated, what are the safeguards in place, because I personally think that digital payments makes it safer because there is more information. There's a lot of information available about these transfers, about the players, about the actors, about the persons involved in the transactions. And so that makes it a bit more difficult, or a person would think twice about doing illegal transfers on the digital payment platforms. And then in terms of foreign currency shortfalls, I think it comes down to the limits, the guardrails that are put in place. So for example, as I mentioned before, in terms of the Dcash, we have limits. And so as we set up the regulations, the rules, the parameters within which these fintechs or digital payments operate, then we can determine what are the best options, what are the safeguards that need to be put in place to prevent things like foreign currency shortfalls, to prevent illegal activity. So I think it comes down to having that conversation across jurisdictions as well to make sure that we're all on the same page when we're allowing these transactions to come through, so that we ensure that we don't have these challenges going forward, of course. And we continue to monitor to make sure that as we go deeper and deeper into this space, that we are agile enough to make sure we make the necessary changes. So as this space is very dynamic, and as things change, we can react quickly, we can respond quickly, and even we can preempt some of the challenges, preempt some of the developments, and put in place the mitigating measures before an eventual incident. So I think it comes down to the collaboration across borders, and also to make sure that we're clear as to what we want to try to achieve, and put necessary safeguards in place to allow that.
Thank you. Go ahead. Quick.
No, this is a good one. This is a good one, Tony.
Yeah, I was going to jump in because it ties in to an earlier question when we were talking about blockchain, right? But I think what the person is asking for, because what you're describing there is really crypto, right? And I think that's the catch-22 with crypto and even the central banks regionally and even the central banks abroad, right? In terms of the basic anonymous principle behind crypto and crypto exchanges, right? And the challenge is obviously, if I'm sending crypto to somebody else, that's completely anonymous, and that's a store of value that's not regulated. as Charmaine was saying, right, that doesn't really have that sort of paper trail to sort of do with that, right? And if you even look at what's happening, even in the big US, right, just back in September, the SEC in the US, again, still very cautious on crypto, but, they're telling the banks, if you want to participate and you actually want to, trade in cryptos and offer digital assets and so forth, you need to stand the liability. It needs to go on your books. And now the banks are saying, whoa, this thing's sounding sexy, but I don't want to take the fall for it, right? Because we all saw what would have happened earlier on, with Terra and Luna, that collapse of that $60 billion coin. And I think these are the challenges, the central banks are facing, because it's really about the consumer protection, right? I mean, we have these new types of technologies, new types of exchange, but at the end of the day, if it's not regulated, if it's not protected, when these things collapse, then, it could absolutely take down, large percentages of the economy and so forth. So I think it's really a balancing act. I don't want to sound too much like a conspiracy theorist, but, that's just the reality of it, right? It's, at the end of the day, a store of value is just that, right? It needs to be supported. It needs to be backed by something. And I think that's the catch-22. You can have the ease of use going across borders because of lack of regulation, but at the same time, it's a roll of the dice,
Absolutely. And I think if I can just have...
Yeah.
If I can share, Tony, thank you for a quick minute on this one, just to say that if I were to lean in on what both Charmaine and John have said from the banking perspective, we also have to protect a very delicate relationship between correspondent banks and respondents, that is our local banks as well, because perhaps you would have known by now that one of the heaviest challenges that we face is the loss of correspondent banking relationships. And that is essence hampers our ability to trade beyond our borders, right? So if we really sit back and think about it for a minute, pretty much everything that we use in our day-to-day existence, from our vehicles to the locks on our doors to the cameras that keep us safe and secure, these are, for the most part, purchased from outside of our Caribbean shores. And so if we were to look at digital currencies, fiat currencies, however you want to term them, blockchain, crypto, whatever it is, there must be a level of security, there must be a level of comfort in ensuring that we are able to answer to those who we do business with, our stakeholders, so that we can provide the necessary comfort in saying that there is a level of security, there's been testing, the regulation is in place, which is why I think the initiatives coming out of our central banks are certainly to be applauded. The Bahamas, we know that Jamaica has made a move. ECCB certainly coming out strong. I believe that Barbados is on track to launch as well. We are seeing that there are tenuous steps being taken. Charmaine would have shared the delays in launching Dcash, again, because we want to ensure that when our product is put out there, there are no negative backlash that would come out and have a further deleterious impact on our delicate economies.
Thanks,
And
Charmaine.
you can just look right up the road. You can look at Belize. We have a cautionary tale right here in the region to see what the impact of losing, your correspondent banking relationships could do to our country.
And just to add, Tony, as well, speaking to what Wendy said about the correspondent banking relationship, one of the things we made sure we did as part of the Dcash development process, we reached out to the correspondent banks and we informed them each step of the way what we were doing, what were the safeguards we were taking, so that they were comfortable that when we did launch Dcash, it was a product that met the muster. So we ensured, so that we don't negatively impact the correspondent banking relationships with our banks, we ensured we engage our correspondent banks very early in the process and throughout the process. So they knew all the security measures, they knew all the steps we were taking to ensure that Dcash was a safe product.
Absolutely. That was a great question, though.
I have a note of clarification. Barbados is not on track with digital central bank digital currency. Let's go to the next question via email. Is there a cost associated with using digital payments? If so, can it deter people from adopting digital payments? Again, is there a cost associated with using digital payments? If so, can it deter people from adopting digital payments?
So I can speak specifically to Dcash. So for the purpose of the pilot, there is no cost for Dcash transactions, neither for the financial institutions, the merchants, the end users. There's no cost. And the question has come very often, what happens post-pilot? We speak about the pilot. What we have said is that as the ECCB, as part of our agenda for financial inclusion to make sure that we drive adoption, we have borne the infrastructure costs of Dcash. And normally when you see banks charge fees, when they have fees and charges, it's to recoup a cost, whether it's a maintenance cost or implementation cost. And so with the ECCB bearing that cost for Dcash, we don't expect that post-pilot, that even if the financial institutions want to implement a fee for their part of the process, whether it's maintaining the wallets or the issuance of the Dcash, that it will be at the level that they have for the regular services, because we have ensured that we keep it at a minimum by bearing the cost, the lion's share of the cost at the ECCB. So for Dcash in particular, we can speak to that.
Thank you.
I would say,
another
Tony, I was going to say from the fintech perspective, that is where you're going to see the successful fintechs, right? Those who come up with interesting business models to sort of manage that cost, right? Because at the end of the day, somebody has to pay for it, right? Whether it's the government, whether it's the banks, whether it's the fintech, or whether it's the customer, right? That is where the secret sauce in terms of, because again, it's a catch-22, right? Is it the merchant going to pay for it? And then for the merchant perspective, I will take the cost so that I could drive more customers through my door because I don't want to collect cash, At the end of the day, it's all about the incentivization, whether it's to incentivize the merchants or the customers, So I think that's where that's the business model that needs to be sort of defined and the use case.
I'm going to do one more email question, and then I'm going to ask you a question that I really like to ask persons, and I think it will be quite interesting. Trinidad and Tobagonian companies transitioning to e-commerce are restricted via the inability of the local banking sector to enable online payments to local bank accounts. Can fintech bridge this failure? I'll repeat it again. Trinidad and Tobagonian companies transitioning to e-commerce are restricted via the inability of the local banking sector to enable online payments to local bank accounts. Can fintech bridge this failure? John, I'm going to ask you to at least start off and answer that question.
Yeah, sure. And that is an interesting question. And that is one of the reasons why we are sort of focusing heavily in fintech within Trinidad and Tobago, right? So I wouldn't use the term failure so strongly, but that is the absolute use case you see for fintechs, and at least with the local banks that we have been engaging into, that is where they absolutely see the role for fintechs. If you think about it, a bank just wants to be a bank, right? A bank doesn't want to be a fintech, right? But at the end of the day, to facilitate any form of e-commerce transactional payments, a bank absolutely needs to be involved in that ecosystem, right? What the bank does well is settle the money, provide access to the rails, right? They do that very, very well. They have the infrastructure to support that. Where the fintech comes in is exactly what that person is describing, right? If I am a customer or a merchant or a small business owner, I want to set up an e-commerce online store. Right now, I have to go to a bank and, largely dealing with any new product or service with a bank, it's very painful. There's a lot of paperwork. It isn't as quickly, or the experience isn't as, intuitive as you would like it to be. This is where you see the rules of what we call payment facilitators or payment aggregators, online marketplaces, sort of taking that sort of lead, right? So in Trinidad and Tobago, we have over 40 different types of marketplaces. So for persons who do not want to go through that hassle, could simply go to one of these marketplaces, list their products on this person's marketplace, and that person handles the payment facilitation for them. Or vice versa, you have these payment facilitators like WePay, who are, for example, would basically onboard you as a merchant. I mean, you can get up and running and start selling products and services within the same day, So that is the exact use case that we are seeking to drive, at least from the payment side, getting fintechs to come in to work with the local banking sector to sort of, I would say, reduce that friction then, particularly on the merchant side. Because the last point I want to drive on that is, in Trinidad, we have about 26,000 micro and small medium enterprises within Trinidad and Tobago. I think when you look at e-commerce or even this digital payment penetration, it's probably less than half. So there's still a large ways to go in terms of moving that.
Thank you so much. And as we wrap up, I really wanted to get your feelings, not really feelings, but your vision for fintech within the region. What vision do you have for fintech in the region, let's say within the next, I don't like to say 5 or 10, I'll make it spicy and say 7 years. Where do you see fintech within the Caribbean region? I'll start with Wendy, then go to Charmaine, and then go to John. And as I said in the rehearsal, keep it crisp because we are strapped for time.
Absolutely. Thank you so much, Tony. And again, just before we wrap up, I want to say thank you for the opportunity to share with you this evening and come into your living rooms to those who are tuning in. I would love to see a very integrated approach of fintech within the banking sector. I think that is the only way that we will create significant efficiencies, address the costs that we hear so much about within the sector and from Joe Public in being able to do what it is that banks truly want to do, which is to help customers realize their financial goals. And as well, noting that we are businesses to find the most profitable ways of so doing, while ensuring, of course, that we maintain a level of compliance so that we do not damage relationships. So I'm certainly looking forward to faster, easier processes for our banking sectors and greater interconnectivity amongst ourselves and globally.
Thanks, Wendy. Before you answer, Charmaine, we have a WhatsApp question. What measures are being taken to protect users' privacy and to ensure the transition to the use of central bank digital currencies is not used to disadvantage others? Again, what measures are being taken to protect users' privacy and to ensure the transition to the use of central bank digital currencies is not used to disadvantage others? Charmaine, I'll let you take that.
So in terms of privacy, so one of the things that we underscore and that came out very forceful in our consultation is the whole issue of privacy. What persons were concerned about, who sees their data, who has access to their data. So what we have said to them is that for those persons who onboard via their financial institutions, the same relationship that they currently have where their information is known only to their financial institution, the same applies for Dcash. So for example, right now, if you have an account at a bank, only your bank knows your information. Similarly with Dcash. And it even goes a step further because the Dcash data is encrypted end to end. So it's just numbers and letters. So an individual just can't look at your wallet and see transactions. And further, when transactions in the wallets are seen via a unique ID, so they would see a particular ID, they would not necessarily know the details of that payment. So there are a number of factors that we have in place to ensure privacy. For those persons who have value-based wallets, their transactions are not monitored because it's below the threshold for transaction monitoring. So their information is held with their agent. The information is stored on the blockchain. It's encrypted end-to-end, and therefore there is no ready access to persons' data as it relates to their transactions. Now, the fact that we have gone out the way to ensure that all persons have access to central bank digital currency, Dcash, we are trying to make sure that nobody is disadvantaged. So, not because you don't have a bank account, it doesn't put you at a disadvantage. Anybody can access Dcash, and so therefore it is meant to be an inclusive solution rather than trying to disadvantage or exclude anybody from the ecosystem.
Charmaine, give us your final thoughts as to your vision as it relates to fintech within the region.
Thanks, Tony. I want to echo Wendy's sentiments about being here this evening. I really welcome the opportunity to share. And I think what I would want to see is greater collaboration within the region and across the region as well. So I think ultimately that is what is going to determine the success of fintechs going forward and the success of digital currencies in general. Because no fintech solution, no payment solution can operate in a vacuum. interoperability is key. And so for me, the vision is about seeing various fintech solutions, whether it be CBDCs or other digital payment platforms, interoperate with each other so that the end user at the end of the day has the best user experience. It's also important as we move into digital transformation worldwide that we have that agility. So we have to be able to adjust, to adapt to the changes, technology changes day to day. And so in designing these solutions, I want us to bear in mind the fact that we cannot just have a solution for today or even the next 2 years. The solution must be to be able to adjust to the changes that we are seeing in the operating environment. Now, at the central bank, we have a vision to have a 50% reduction in the use of physical cash by 2025. However, we can't do that on our own. So in addition to Dcash, we wish to work alongside the financial institutions and other fintech companies to achieve that goal and even take it beyond that.
Thank you, John.
Yeah, and again, thanks everybody. This has been a very good panel. I would like to say I'm a rose amongst the thorns, but I think it's the opposite. I'm a thorn amongst the roses.
Well, my last name is Thorn, so you got to be a rose.
Well, we have two thorns. My simple closing statement, I would say, I would kind of just change it a little bit. What would be my wish for fintech? Really, and it really goes to the banking sector because I think this is really where the marriage should happen, right? I think open banking should be pursued by all central banks across the region because that is where you're really going to see the power of what fintech can bring to the population. Because if you think about it, fintechs, they're not spending the amount of time or the investment that the banks would have taken to reach to this point, right? They are coming out of the gate nimble. They are coming out agile. They are basically feeling fast, moving forward. And I think open banking, being able to have that connectivity between the regional banks and allowing fintechs to develop what I would call those customer-friendly, frictionless applications, that is where you're going to see the marriage of a good user experience and really and truly, I would say a streamlined sort of fee moving money from account to account. I think that's the success for fintechs within the region. Once we could connect the banks regionally via fintechs, I think that is where the promise and the future of scale really lies, in my opinion.
John, I don't want you to. I don't want us to end without asking this question because you work in finance. I think everybody here works in finance. Just very quickly, what is open banking? Because I know people are going to ask that, and I don't want people leaving here and having any question marks. If you could give us a short explanation for what open banking is for those watching.
Basically, open banking is a financial services term within fintech. So it really talks about, I'm going to come with another term, but it's the use of APIs, right, in the technology world, which is application programmable interfaces. So if you think about it, Rails that basically, for example, you have an account in Republic Bank. What open banking allows is that there is some connectivity into that bank's system where, as a fintech, I can pass information from Republic Bank to Scotiabank. I can create that connectivity. So basically from database to database. So meaning from a customer perspective, if I'm going into my mobile app as a use case, for example, and I want to send money to my cousin in Grenada, but I don't know their account number, open banking allows me to do a simple search and I can type the name. So it basically creates the rails to share data, which again will provide a lot more connectivity and simplicity in terms of how you move the financial data through the systems.
It opens up banking and it makes it more accessible.
It opens up banking, but I would add to the customer's benefit. Yeah.
Great. Excellent. This has been wonderful. As I said, I could talk to you guys for hours on end, but we have a short timeline and it's always a pleasure hosting the Caribbean Economic Forum. Really want to thank the panelists, really want to thank the teams across the Caribbean and here in London. God bless you. This has been wonderful. This has been the latest edition of the Caribbean Economic Forum, brought to you by our wonderful sponsors and producers, the Central Bank of Barbados. I've been your host, Tony Thorne. God bless you. Good night.